Hello, Philip. Lwando, George, Mighty Chickens. Goeienaand, Philip. Hoe gaan het vanaand? Mitswe, Rini, goeienaand allemaal. Hallo daar. Hallo Brian, hallo Don, hallo Banks. How's it, Frank? Ladies and gents, it's been a day and a day and a day. But I made it on time. I cannot believe it. How's it, Brian? How you doing? Welcome. How's it, Scotty Scott? Scotty, I hope you got my message. I hope you saw my video. It was not me asking you for money. Philip. Nee, is nie 'n nadors nie. Is net 'n lang dag gewees. How's it, Brian? Thank you, Scotty. Glad you got it. Please be careful, mate. Be careful, be vigilant. There's so many scamsters out there. It's unbelievable. Okay. Whew. Folks, like I say, it has been a day and a half. It's been good. It's been good. Make no mistake. It's been good. But it's been busy. And I almost didn't think I was going to make it tonight. So I'm glad I'm here. But I have to warn you up front. Tonight, 7 o'clock, I'm cutting. I have to take a break. Any case. Any questions? Anybody got anything interesting? So far, so good. If there's no questions, it means that I've solved the financial problems of the world and all South Africa's people. Oh, I hope so, in any case. Let's see. How's Nick? Who else? One new message. Yes, I'm waiting to see the message. There we go. Okay. Phillips, market went through the last 10 days. Do you know why? Philip, I don't, to be honest with you. As a matter of fact, the last time I paid any attention to the markets was after friend Trump said he's going to impose all these tariffs and whatever the case might be. And then for the next 5 days, everybody was in a panic because it went bad for 5 days and then it recovered. I really don't know. I'll have to speak to the stockbroker that I deal with. Maybe he'll know. But all I can think is that the same Mr. Trump then made another announcement to say that these tariffs that he was going to impose on everybody is that he's putting a hold on it for 3 months or something to that effect. So I don't know. Maybe that's just the world thinking, okay, well, we have to do business now. Any case, let's see. Charlene, what is an asset swap? Good evening, Charlene. Welcome. So, an asset swap. You can invest money internationally, okay? You can do direct investments internationally. And if you do a direct investment internationally, it basically means that you take, let's call it R1 million, and you give it to a company and they physically take the money outside of South Africa. You open an investment in a foreign country. Very often it goes hand in hand with the type of bank account that you've got there. And the money is available on that side of the world, be that the UK, Isle of Man, America, whatever the case might be. So when you get on that side, because you're going on holiday or whatever, you don't have to take any pocket money with you. You can go and draw your money over there and you can do what you want. Asset swap is similar but not the same in the following way. Now you invest your R1 million, but you are not investing it directly internationally. You invest it locally with a local investment company, but you want the money to be invested on global markets. So you invest it into this investment. The investment house then takes the money and they move it overseas under their corporate banner. And they go and invest it for you in the UK and America and whatever the case might be. And then on the day of maturity, or the day that you want to use your money, you want to withdraw it, Then they take that money and they bring it back into South Africa. So they take it out of that market, they bring it back into South Africa, and you can draw it here again. And that, in essence, is what it means, what an asset swap is. Okay, I hope that answers it for you. Let's see who else has got a question here. Alison, good evening. Hi, got my pension. I'm 40 years old. It's about 400,000 Rand. Where can I invest it so it can grow? Alison, first of all, I need to ask you, why did you take your pension? If you say you got your pension, please tell me it's still in the pension fund. I hope it's still in the pension fund. So where you can invest it, if it's still in the pension fund and you need to move it, you can move it into a preservation fund. So pension or preservation fund, depending on what you have, and all the big insurers has it. The Old Mutuals, the Sanlams, the Liberties, the Allan Greys, the Coronation, they all have this. There's even some companies that do some alternative investments that also have funds that you can put in, that they can use for a preservation fund. But if you have withdrawn the money and you're now sitting with the 400,000 Rand after withdrawing it, well, then you can go and invest it into endowments. You can put it into unit trust. You can put it into alternative investments. You can make use of things like arbitrage. You can go and buy shares directly. There is a wide variety. And where you're going to invest it is going to depend on your specific circumstances. Somebody that takes 400,000 Rand, but they've already got 40 million, has got completely different circumstances to the person that takes 400,000 Rand and that's all they have. So the person that's got 40 million, he's got this 400,000 Rand spare, he can go absolutely high risk, aggressive, play around with the money because it's small change. If they lose it, it's not a train smash, but if this investment makes it big, it makes it super big. The person that only has 400,000 Rand, well, they have to go and look at something more conservative, like an endowment or unit trust, and a portfolio that's in line with the risk that they feel they can take. Can they take some dips in the market? Can they not? So for somebody like you, Alison, in order to advise you, an advisor would have to have a consultation with you, find out more about your assets, liabilities, income and expenditure, and based on all of those facts, they must make a recommendation. As a matter of fact, I know people don't see this as a form of investing, but if you've got some quite substantial debt, and you are paying big interest rates like you do on personal loans and credit cards, where interest rates can be anything from 18 to 22%, might actually be a good idea to actually go and pay off those debts. Take the fact or accept the fact that now you don't have any more capital available, but now at least you're clean, you don't have to repay that debt, and now you can start rebuilding. So it's really going to depend on your personal circumstances what investment will be the best for you. I hope that gives you a bit of an answer, Alison. Brian, I have 32 years service in government as an educator. I'm thinking to retire early at 58, early 2026. Okay, Brian, so if you're thinking of doing that, you obviously have heard about this, the penalty that is not a penalty from GPF. So if you retire early at 58, first thing that's going to happen is you will be penalized 0.33% for every month that you go early. So 0.33 times 12 is almost 4%. So they will penalize you by basically 8% if you go 24 months early. What that means is that if you would have received an income of, let's call it 10,000 Rand, now you will get 10,000 Rand less 8%, so you'll get like 9,200 Rand, if my calculations are right. It's been a long day, it might be wrong. But then you can apply for the penalty to be waived, or the penalty to be, for you to be compensated for the penalty. And then if your department approves it, then they go and do a calculation whereby they calculate what this income is that you're losing because you're going earlier than 68, and they can top up the portion that they're going to pay you in cash. So basically on top of your 1/3, they'll give you that. So everybody believes that this penalty now, if you get this payout and it's without penalty, that's it. I'm sorted. I can just go early. In the long run, you are still going to get out less than what you would have gotten out if you retired at 60. Although you get that compensation, in the long run, you're always going to get 8% less because you started 8% less for the rest of your life. And that compensation is not going to, what's the word? It's not going to, it's not going to compensate you for an income all the way to, say, the age of 78. Because they're not going to calculate it from now until 78. They're just going to calculate it for the period before the age of 60. Hope that makes sense, Brian. Philip, if you resign, whoops, there goes Philip's question. There comes Philip's question again. If you resign, the tax is heavy. Correct. How is tax when you take a voluntary package? It's going to be exactly the same, Philip. There's only one situation before retirement where the tax is not so heavy, and that is a forced retrenchment. If you are forced into retrenchment, then your pension fund, you can actually withdraw in the same way that you would have at actual retirement, getting 550,000 tax-free, next 200,000, 18%, etc., etc. So forced retrenchment is the only time where you get the same benefits as what you would have gotten on your 1/3 at retirement. But, and this is the but, once you have used that, it's used. So if you now start a new pension fund, you build up again, you get to the age of 60, and let's say your 1/3 was exactly 550,000, that's what you got tax-free. Now when you get to retirement with the next pension fund, you've already used your 550. Can't get it again. It's over and done with. So voluntary package, no, you will be taxed as with withdrawal, but if it's a forced retrenchment, then you can exercise the option. Personal opinion, it's still better that whether it's a voluntary package or forced retrenchment, you still protect your capital if possible by moving it to a preservation fund while you move on to the next thing in your life. Okay, Philip, hope that helps. Brian says, I sadly don't have an annuity. Is this a good plan? Brian, I assume you're saying that you do not have an annuity, meaning either a retirement annuity or a living life annuity, meaning income plan. If you don't have a retirement annuity, it's a good thing to look into it, both from a growth point of view, both from a growth point of view, a tax rebate point of view, and from a protection against creditors. That's what people don't realize about retirement annuities. Retirement annuities, pension, always protected against creditors. So if you get into real financial problems and you are declared bankrupt and they come and they take your house and they take your car, they take your clothes, they take your underwear, the one thing they can't touch is that retirement annuity or that pension. So that's for me one of the most important things about that. Only time they can touch that is if you were involved in some criminal activity. Then once again, there's a possibility. So Brian, if you talk about the retirement annuity, definitely look into it. You will not be disappointed, especially if you're planning towards retirement. If you don't have an income annuity, well, then it's just because you haven't converted your pension, provident, or retirement annuity into an income annuity. Just see, what's the first thing to start learning in financial studies? What's the first thing to start learning in financial? Wow, Jussie, my honest opinion is the first thing that you should learn is how to budget. Is how to budget and how to work on a budget and how to live within your means. That is the most important. If you can learn how to budget, you can learn to live with less than you get within your means. That's the most important. Second thing is pay yourself first. And when we say pay yourself first, when you receive an income, the first thing you should do is save some money. It doesn't matter. The first thing you should do is save some money. At least 10%, preferably 15%, 20% if you're in a real good situation. And don't think about it as saving for retirement or saving for buying houses. Just start saving. That is the foundation of being or becoming wealthy. So that's the first thing, budgeting and paying yourself first. That's what I would advise anybody when they say, let me start learning about financial studies. Then from there, it broadens out. There is so much. And what I would recommend is that you start reading a few books on that. Dave Ramsey, go and read some of Dave Ramsey's books on how to become financially strong. Psychology of Money, go and read that on investment and understanding the psychology behind it and why some people just can't save and why some people just get into all this debt. Understand those things and the rest will come. It will come. There's so much. Okay, Jesse, hope that helps. Byron, hi Corne, are you experiencing any delays in funds being returned from offshore due to Trump? No, Byron, everything is going as per usual. Remember, Trump has no influence on your investment. It's the investment house and how good or bad they are in terms of their administration. So, no, there won't be and there has not been. So don't worry about that, Byron. And then this happens like I jump forward about 20 messages and I have to go back. Okay, I'm almost there, folks. There we go. Let's see, yeah. Can I personally come to you in your room so you can explain to me because I don't understand? Enschle, you are more than welcome to. I do consultations and I do ask a consultation fee for the first consultation. So, you must just be willing to pay me a few bucks. But I do have advisors. I've got 10 advisors that works for me in my company. And they all work under my wing. They're well educated, well trained, understand the whole process. They do it according to my personal philosophy. So if need be, I can always book an appointment for you with one of them. And they don't ask a consultation fee. That will change in the very near future. But for now, you can still make use of the free offer. Okay. In my profile is my WhatsApp number. You contact me there and I'll put you in contact with somebody. Let's see who's next here. Creer. Ek is by 'n groot mynmaatskappy. Ek kan my derde pot trek, tax verloor en nog steeds die Wag, Creer, ek moet nou net weer mooi lees hierso. Ek is by 'n groot mynmaatskappy. Ek kan my derde pot trek, tax verloor en nog steeds die myn se fonds. Creer, nommer 1, jy wil nie van jou 3-pot trek nie. Die tax gaan jou doodmaak. Okay? So, moenie van jou 3-pot system trek nie. Dit is 'n absolute klug dat 'n mens kan geld trek, daar so jy tax betaal, die geld gaan belê en jy gaan beter afwees. Dis die eerste ding. Die tweede ding is, die pensioenfonds wat jy het by daai myn is nie die myn se geld nie. Dit gaan in 'n fonds in wat geadministreer word namens die myn. Soos ek dink net byvoorbeeld aan die Sentinel fonds wat 'n groot mynmaatskappy pensioenfonds. Dis nie die myn se geld nie, dis jou geld. Dit is 'n fondsbestuurder, dis 'n beleggingshuis wat daai geld bestuur. Die myn kan ondergaan, die myn kan bankrot gaan. Jou geld is beskerm, dis jou pensioenfondsgeld. So, moenie daaroor worry nie. So, nommer 1, moenie onttrek van jou 3-pot system nie, meneer. Jy gaan jouself net seermaak. Don't do that. Wag tot jy aftree, vat jou 1/3, dan werk mense die belasting en goeders uit, trek jou 2/3 pensioen kry. Nommer 2, is nie myn se geld nie, moenie worry nie. Jy sal nie jou geld verloor nie, dis in hulle pensioenfonds, daar's 'n administrasiemaatskappy wat dit administreer en bestuur. Desi. How does a life and living annuity work? Can you take one before retirement? So Desi, retirement annuities, okay, is where you save money towards retirement and you build up all this capital that you can retire with one day. A living annuity and a life annuity is the actual income plans, the income annuities that you buy with that retirement annuity money to give you an income into the future. So you build up capital in your pension fund, in your provident fund, in your retirement annuity. And then when you get to retirement, then you go and you exercise an option to convert that retirement annuity into either a life or living annuity so that you start receiving an income from that capital. And that's how it works. So you can't take a life or living annuity before retirement. You only do it at retirement. I hope that answers it for you, Daisy. Yaku. People when it come to two-pot dishes, stay away. I've been taxed all my car's money when I resigned. Jaco, two-pot system and resigning, two different things, brother. Two different things, okay? So two-pot system is this ridiculous thing that's been brought in by government to say that you can actually draw from your retirement annuity and your pension fund before retirement so that you can pay off debts, which nobody does. Withdrawing from any pension or retirement fund before retirement, then you get taxed because you're taking the money when you leave and before you get to your actual retirement age, and you get taxed from 27,500 upwards. So if you've got 100,000 rand, they tax you on the difference between 27,500 and 100,000. And that, sir, is why you've been taxed a small car's money when you resigned. Never, never, never resign from a fund. You will always, always lose in terms of tax, but not only in terms of tax, in terms of going forward. Because now that that tax is gone and it can't grow for you anymore because it would have been part of your money, you're most probably using the money for something. 9 out of 10 times something stupid, according to me. And now you have to start building up again towards retirement. And now you have to try and catch up those savings. You are... very few people ever catch it up. Very few people. So Jaco, if it was two-pot, then it's okay. Then you have got a bit of hurt. But if you actually resigned, that's a withdrawal tax. And, oh man, then I feel sorry for you. I'm working in the Middle East. How do I send money without crazy tax? Now, that is a question I can't answer for you. I know how to get money from one country to another country. We've got a company that can help us with that. But getting money from one country to another country without crazy tax, I'm not completely sure that I am with you. The fact of the matter is that South Africa has a dual taxation system with most countries in the world. So if you're working in the Middle East and you are paying tax in the Middle East and it's in line with the dual taxation agreement in South Africa, then you should not be paying tax when you bring the money from there to South Africa. That's as easy as it is. The only time that you will pay tax is if your tax bracket on the dual taxation system, the income that you earn is higher than that tax bracket agreement, and you therefore have to pay some tax in South Africa as well. This becomes really technical. But my good man or good lady, you should not be paying tax. And if you are, then it's time for you to make contact with somebody that is very schooled in international taxes and get them to help you to sort out your money matters from a tax perspective. You need somebody. I've got a guy by the name of Etienne. He's brilliant. You contact me, I'll put you in contact with him. He'll sort you out and he'll help you to understand everything easier. Okay. Eric, good day, good day. Can you move your RA from one company to another, and would there be penalties? So Eric, yes, you can. If you move an RA from one company to another company, it's called a Section 14 transfer. And whether there's going to be big penalties is going to depend on a number of factors. First of all, it's going to depend on whether the retirement annuity that you have is a flexible retirement annuity, meaning that you've just agreed to pay month by month by month, and you haven't set any term, you haven't made a fixed term, or whether it's a focused investment where you actually have said, I will save for 20 years and I commit to it. Second thing is, it depends on how old this retirement annuity is. If the retirement annuity has been running long enough, then the penalties could be very, very small. So there's a number of factors. In some cases, a Section 14 transfer is going to incur absolutely zero penalties. In other instances, there might be a substantial penalty. So the best thing you can do is, if you want to move it from one company to another, the first thing you have to check, is it really worth it? Is this different company going to give me much better funds, much lower cost, etc., etc.? Is it worth it? It's always better to first look at changing the fund that you are in. That's the first thing. The second thing is then to, before you do it, to ask the company that you're moving from to give you a quotation on what that penalty is going to be. And then based on that quotation, that penalty, then once again taking into consideration the costs and the portfolio growth, then only can one make an informed decision whether it's a good or a bad thing to move money. Okay, I hope it answers it, Eric. So let's see who's next year. Whoops, and there it goes. Now I've jumped about 720 messages. Okay, not really, but it feels like it. Sorry folks, I'm just scrolling back a bit here, and here we go. Oh, it's a pleasure, Brian. I'm glad if it helped. Great, juicy. Philip, I've heard years of service at transport prior to 2000 adds to your tax-free portion at retirement. So Philip, if you are part of the GPF fund, and I think Transnet is not GPF fund, but it's also a defined benefit fund. On those funds, it's not prior to 2000, prior to 1998. So legislation until 1998 said that all pensions in that GPF and Transnet, whatever, everything that was paid in, everything that was paid out is absolutely tax-free. In 1998, the legislation came in and said from year on in, you will now be taxed when you get to retirement. So all funds paid in until 1998 is tax-free. Everything from 1998 going forward is taxable. So indeed, if you get to retirement and you can now take your 1/3, and obviously 550,000 is tax-free, but let's say there was 100,000 Rand in from prior 1998, that 100,000 Rand will also be tax-free, and it will therefore increase that tax-free portion. So I hope that makes it a bit more clear for you, Philip. Okay. Can I get information about your service? Yes, you can. I'm going to ask you the same as I asked the previous lady. Check in my profile. There's a WhatsApp number as well as our website. Go to you can either use the WhatsApp number or you can use the email on my website. Contact me and I will take it from there and help you. Whatever questions you have, put you in contact with the right people. No problem. We'll sort you out. Creer klop. Klop. Ek sal 'n afspraak maak en jy wys. Okay, Creer, ek wag vir jou. Leto, Sanlam Financial Advisor. Good evening. I'm glad to see that I've got some financial advisors that listens to me. Creer, een of ander rede kan ek net nie lang boodskappe tik nie. Creer, weet jy wat is die wonderlike ding met betrekking tot WhatsApp? Jy kan 'n voice note stuur, chom. So gaan save net die nommer, stuur my 'n voice note. Okay, Daisy. If I had 2 million at age 40, would I not be allowed to buy a living annuity? So Daisy, if you have 2 million at the age of 40 and it is in a retirement annuity, pension or provident fund, no. Can't buy the living annuity, you can only do that to the age of 55. But if you have this 2 million Rand and it's your own cash that you saved up in a bank or investment, whatever the case might be, then you can buy an income annuity. But then it becomes a voluntary income annuity. Small terminology change. But it's a voluntary income annuity that you can buy with your own money at the age of 40. And the tax implications on a voluntary income annuity differs again from a living and a life annuity. So this is why I got a job, folks, with all these technicalities. There's a whole range of tax implications of this, that, and the other. But yes, you can buy an income annuity, but it will not be called a living annuity. It will be called an income annuity. Marius Prys, oom Corneille. Weet jy is nie lief vir eiendom nie, maar wat van Airbnb? Potch groete. Marius Prys, my good man. You know what? My wife comes from Potchefstroom. I lived there for a year. Love the town. Fantastic place. Potch is already or has already expanded tremendously. Potch is becoming one of those towns where there's certain areas where the property is not worth nothing because the area has gone down the drain. There's other areas where the properties are just booming because that's the area that's growing. So when it comes to property, location, location, location. That's the first thing. Second thing is, can you buy this property cash? If you can, go for it. Do your Airbnb. It's like running a business. If you can't get the right location, you can't buy cash. Crappy idea. Absolutely crappy idea. That's my personal opinion, because you are sitting with a property that is not yours. You have to pay it. It only becomes yours when it's paid off. Now you've got this Airbnb. You're paying your bond on a monthly basis. Yeah, like people come in, and then you've got 3 or 6 months where the Airbnb is only 20% or 50% full. Suddenly you have to pay all these expenses where you are thinking you're generating an income. So property, doesn't matter whether it's an Airbnb, whether you're going to rent it out, whether you're going to buy it and sell it. If you're going to do it in this fashion, it becomes a business. Make sure that you upskill yourself in business, that you understand business, that you can do business, that you know how to manage business. And then if you can say yes to all of those, well, go for it. Desi says the two-part system was a dirty backdoor tax scheme like they tried to do with VAT increases. Desi, I will not comment on that, because I think if I have to express my personal views out loud, I might go to jail. Mrs. Hello, my babe. Okay, well, Mrs. how's it? Net om jy idee te gee, oor 30 jaar sal iemand wat 'n derde wegsit op Allan Gray se equity fonds met dieselfde as gaan as wat ek 2/3 meer wegsit. Net om jy idee te gee, oor 30 jaar sal iemand wat 'n derde wegsit op Allan Gray se equity fonds met dieselfde afgaan as ek wat 2/3 meer wegsit. Dis moontlik, Kreer. Dit wat jy nou sê is redelik, what's the word? It's all circumstantial. And it's circumstantial because it depends on the fund that you invested in, how long you've been investing in, etc., etc. Interesting fact. Let's say you take out an investment for your child when your child is born, and you pay 1,000 Rand a month into that investment for 18 years. And you then stop paying that investment, and you just leave it there, and your child leaves it there until they reach the age of 60. Their friend, whose parents did not do a 1,000 Rand a month investment for them, starts at the age of 21 to put money away for the same reason. That friend is going to put away most probably 4,000 to 5,000 Rand per month in order to try and catch up with the 1,000 Rand that was saved for 18 years and then just left to keep on growing, growth on growth on growth. That person is going to do that 4,000 to 5,000 Rand. They're going to have to do it for the full 40 years, and they will most probably still not catch up with the person that had the 1,000 Rand for 18 years. The power of compound growth. That's what it's about. Investment is something that one should look at as long term. You want to invest for a year or 2 years and get 20, 30, 40% growth. It's short-sighted. You basically want to gamble. It's not investing. Okay. Off my soapbox. Okay. Good evening. Do you have an idea about Allan Gray investment that can make money on? Yes, Kay. Allan Gray has got all the same investments that other companies have. Retirement annuities, unit trust, endowments. and they've got all their own portfolios. Allan Gray Balance Fund, Allan Gray Income Fund, Allan Gray Equity Fund, Orbis Global Funds. So it's a question of what type of investment do I need? How much risk do I want to take with my portfolio? That's the portfolio that I choose. So Allan Gray is a great company. Can't go wrong with it. Kay became number 7 fan. How did you manage to do that, Kay? I don't even know whose fans number 1, 2, 3, 4, 5, and 6. Let's see what they say here. Who's next? Gav, did I miss your question? Sorry, mate. Any chance you can post it again? I try not to miss anybody, but if I did, I'm sorry, man, Gav. Apologies. But I tell you what, Gav. Let me see. Oops. Just give me a second here, Gav. Okay. So, ladies and gents, and Gav specifically, here is my WhatsApp number that you will also find in my profile. It is 060-541-4685. I'll repeat it quickly. 060-541-4685. So Gav, I'm sitting with that phone right next to me here. Pop me a quick WhatsApp there. It has to be in writing, okay? But pop me a quick WhatsApp there. And if I don't get to your question, then I'll just read it off my phone and I'll answer it. Desi, is the income annuity for life if you buy it cash at age 40 or better to invest the money? Desi, yes. Your income annuities that you buy with voluntary money, you can either choose to buy it for a specific term, 5 years, 10 years, 20 years, or you can choose to buy it for life. So you can buy a guarantee of 5 years and lifelong thereafter. So either you buy, let's say you buy it for 5 years, then you're going to get X amount of income. But if you say I want it for guaranteed for 5 years, but then lifelong thereafter, so even if I live for the next 40 years, then they will give you a different income. So they go and calculate it based on your age and whatever, how long the life expectancy is, etc., etc., etc. So yes, you can do it either way, only a specific term or for life. And you say, or better to invest the money. Well, Desi, it depends on whether you need an income. That's what it comes down to. If you don't need an income, absolutely. It's much better than to invest it for growth. There's not even two ways about it. So if you need an income, you can get either for a period or for life. If you don't need an income, invest it. Much better option. Shireen, is rand-denominated overseas funds best if you don't emigrate? Charlene, I'm not sure about this question. Is rand-denominated overseas funds best if you don't emigrate? So you're talking about the asset swap portfolios that we talked about, Dana. Well, I enjoy those asset swap portfolios because they have great returns. There's 2 funds that I love using. And one fund has been doing an average of 14% for 25 years. The other fund has been doing an average of 16% for the last 7 years. So yes, I do think those rand-denominated funds for asset swap is great. Because remember, you get the growth because your money is now invested internationally, let's say in the US. So you get the growth on whatever shares you've got in that market, in that fund. And then when you bring the money back to South Africa, if the rand has depreciated, which has been happening steadily over the years and which is expected to continue, then you also get the benefit of the depreciating rand. So you actually get a bit of growth on a depreciating rand. So yes, I think it is fantastic, those. Ngamla, hi. If someone resigns and keeps money with the company, what's the best way to withdraw it to avoid tax? So in Ngamla, if you resign, you leave it with your company, number one, they're going to try and force you to take it away. They can't, but they're going to try, okay? So keep that in mind. That's the first thing. Second thing is, you cannot withdraw it to avoid tax. You cannot. Impossible. If you're going to withdraw it, you're going to pay tax, bottom line. So the only thing I can say to you is what I keep on telling people: move the money into a preservation fund. You can move it away from your company into a preservation fund with a different company. Then it is moved tax-free. The money keeps on growing until the day that you get to retirement, and then you can retire from the fund. Much better option, much better from a tax perspective, okay? And you get a lot of growth. Evening, Gunay. I've seen lots of videos alluding to renting better than actually paying your own bond. Royston, in some cases it is like that, eh? It is absolutely like that. I think that when it comes to renting, different situations, once again, different situations that one has to go and evaluate, okay? But to give you a simple example, if you go buy a house and the bond repayment is 20,000 Rand per month, okay? But it's in a specific area, it's a specific house, specific size, whatever the case might be. If you go to that same area and at the stage they've got a, at that stage the area, the rental is not good in that area, the people are battling to find renters, then it's very possible that you can find a property where the rent should be 20,000 Rand a month, but the rent is just 12,000 Rand a month for argument's sake. Now, if you go and pay that rent of 12,000 Rand a month and you go and save the 8,000 Rand and you do this over 10, 15, 20 year period, chances are very, very good that at some point in the future, before you get to the 20th year, you've saved up enough capital to go and buy the house of your dreams cash, the one that would have cost you 20,000 Rand in bond repayments. So you've paid rent, but because you've saved, you can now buy something cash. You never have to pay all that interest and everything that's involved. And because cash is king, you can now maybe even negotiate a better price. So it's a bit of out of the box thinking when it comes to property. And that's just one example of how renting can be better than buying. But there's a number of ways that one could go look at it. And I won't say always, but there are definitely reasons and motivations for renting above buying. Shandy, does fixed deposits allow compound interest or only on the initial investment amount? So Shandy, I don't know all bank products, but most bank products is not compound growth. It's single interest growth. So that means you put in 100,000 Rand and they tell you they're going to give you 9% interest. You get 9% on that 100,000, so you get 9,000 Rand. Next year, you get 9,000 Rand again because they give you 9,000 on the 100,000 every time. Difference with compound growth is you get 9% on your 100,000 Rand, so now you have 109,000 Rand. Next year, you get 9,900 Rand, and I don't know if my calculation is quite right now. Next year, you get 9,900 Rand because now you get growth on your 100,000 Rand as well as on the 9,000 growth that you've got already. So single interest is what you get at the bank as far as I'm concerned. Compound growth is what you get with an investment company. So let's see who's next year. Oh, thank you, Kay. You actually put in the number. Can you believe it? Okay, here's Guff. Let's see what Guff says. Guff says, thanks to the weekly live. To retire successfully, how much times of your current yearly net salary would you need to acquire, assuming you have 5 years to retire? So it doesn't matter how much time you've got to acquire it, Gav. The bottom line is, as a rule of thumb, you have to have 25 times your annual income in capital saved up in order to be able to retire. So what does that mean in figures? It means that I earn 10,000 Rand per month, or take home 10,000, doesn't matter how you look at it. And that's 120,000 Rand per year. So 120,000 times 25 equals 3 million rand. That's what you then need in order to retire comfortably. And it's not on net salary, it's on gross salary. If you work on net salary, you're most probably going to miss the bus. So it doesn't matter how much time you've got left. It always comes to 25 times your annual income. And remember, folks, that's a rule of thumb. It's an easy way to quickly calculate a need. It is not set in stone. For different people, there's going to be different requirements. Some people is going to need 25 times annual. Other people is going to need 50 times annual. Other people is going to need 15 times annual. It's all going to depend on your personal circumstances and what you want at retirement. Can a company have two wage models, one old and one new? When red circle, you're saying you pay too much. I really don't know because I'm not in HR. I don't deal with salary packages. I have heard of companies that changed from one model to a different model, and then you had a specific period of time in which you had to choose. So I suppose it's possible, but I honestly can't tell you because I don't deal in HR. Sorry. Go speak to your HR or speak to somebody in labor. What is an aggressive but safe? Desi, I love this question. What is an aggressive but safe, no losses possible investment option with high returns? There is nothing like that, Desi. There is nothing like that. So if you go and look, on this side of the scale is safe, no losses, guarantees. On this side of the scale is aggressive, up and down swings, potential losses. It's two opposite sides of a coin, of a pole, of a whatever you want to call it. It's impossible to get these two to come together and do what you want to do. All you can do is you can look at an aggressive fund that has a good track record, which philosophy is right, and over time, you will have the safety that you're hoping for. So any aggressive type of investment starts up very aggressively, and as time goes by, the risk gets smaller and smaller and smaller. Dory, baie dankie vir jou WhatsApp nommer. Ek is naby afdraai. Ek is so onseker. Dory, send me a message, mate. I'll help you out. I'll put one of my guys in contact with you. I actually sat down with a couple this afternoon again, and exactly the same situation. Confused, don't know, unsure, call it what you want. And it was an eye-opener once again for me while we discussed their situation of what they were thinking of doing, and then when I advised them, how they realized that what they wanted to do, how it would have been very bad for them. So absolutely, I live for this. I live for helping people to make the right decisions so that they are going to be okay. So contact me, Dory. I will sort you out. The risks on investments is a problem for me. Isn't bank more risk-free but less growth? Yes, Odex, that is indeed so. So here's the thing, Odex. If you've got 5 years or longer to invest, then you can afford to take some risk. Even if it's a medium risk portfolio where you can expect a 8.5 to 9.5% return on investment. So go and do something like that. But to me, it doesn't make sense to go and invest money in a bank, get a 7% interest on a money market account where inflation is 6%, you make 1% more than inflation, then after tax, you don't actually get 7%, you get 5.5%. Then you've actually lost money. So, yes, banks have less risk, but the growth is so pathetic, and after tax implications, it is so ridiculous that it doesn't make sense for me why people would put money there. So go and look at an investment. Trust me, like I say, anything, even 3 years, but 5 years or longer, you should be looking at taking some risk. And folks, risk, I'm going to make a video of an hour on risk. Risk is a question of equities. I'm buying a bunch of shares. If the stock market goes up, I go up. If the stock market goes down, I go down. The risk is determined by the type of shares that's in there. And then the risk is eliminated by how long you stay within your investment. So if you are in an investment that has high risk, it's all equities. Remember, all those shares in that fund, you are not buying into one share. You're not only buying Pick and Pay shares or Sasol shares or Harmony Gold shares. In that fund, you've got 100, 150, 200 different shares. So if one of those companies bites the dust, all the other companies didn't bite the dust. So your risk is in any case diversified within the fund. So when an equity portfolio gives you a return of, let's call it 9% or 10% or 11%, okay? That's with all the companies that showed positive growth, less the companies that did negative growth. But you've already diversified in it. And high-risk portfolios or equity portfolios, I could go and show you over and over and over in history. When there's a dip in the mark, like in 2020 when we had COVID, market dipped by 30-40%. Everybody panicked. Everybody wanted to withdraw their money. The people that stayed invested was in panic stations for 6 months. 6 months later, they actually had more money than before the dip. So understand risk. And once you understand risk and you understand the different risk of different investments, go and invest in an investment that is more aggressive, that has more risk, so that you can get 9, 10, 11% growth and that you can beat inflation by 4 or 5%. Then you're making money. Then you're becoming wealthy. Yes, Fayad. Don't be harsh with Desi, okay? Where was I? Oh, no, it's not that one. Desi, do you do short-term insurance? Yes, Desi, we do a bit of short-term insurance in our company. We've got a number of personal or private and commercial clients, so absolutely we do that. I don't talk about it very often because it is not my main game. My main game is basically investments because that's what I've become very good at, and estate planning, that's what I've become very good at. Short-term insurance, we can do, but I will most probably hand you over to one of my advisors that's more proficient in that. Hi, Corne, if you resign, can you move a provident fund from your company's fund to a personal Old Mutual fund? You can move it to a preservation fund with Old Mutual. You can also move it to your personal retirement annuity with Old Mutual, but I would not recommend that you put it into the retirement annuity. I'll recommend that you move it into the preservation fund. If you move it into the retirement annuity, same as preservation fund, there's no extra tax benefits for you, okay? Excuse me. But now your money is in there. If you had it in a separate preservation fund, you have more flexibility. As much as I hate to tell you guys this, if your money is in a preservation fund and you do have a problem and you do need to withdraw some money, you can actually draw some money out of it. You're going to pay tax, same as with withdrawal tax when you resign, but you can access some of that money. That's the one thing. The second thing is, and like I say, maybe you should just forget about that because I hate telling people that because then they want to do it and it's a pain. It's a pain for you because you're going to lose. But if you also have a preservation fund and a retirement annuity, it gives you flexibility at retirement. Now you can go and plan to retire from this one and then from that one. You don't have to retire from everything at once. It gives you flexibility in planning your retirement. Grip, is crypto a good investment? Do you invest in crypto? Grip, we do crypto arbitrage. We do a bit of crypto arbitrage. Personally, to me, crypto is like shares these days. You have to understand the market. You have to understand that it's all vraag en aanbod, demand, and what's the ask and demand. That's what it's all about. So crypto is very much like shares these days. It was a very scary thing in the beginning. Now it's like that. It's not going away. Personally, I do not invest in crypto. None of my guys will invest in crypto for anybody. But like I say, we do crypto arbitrage. That's something that we do for specific reasons, because there's guarantees built in, etc., etc. But directly into crypto, not going to happen in my firm, mate. Daisy, if it's compounded monthly or annually, find out from the bank. Daisy, yeah. Compound growth, once again, is going to be different from company to, not company to company, from, how do I put it now? Investment house to investment house, and how they do their growth little thing. It's the technical stuff. It's where all these guys with the actuarial degrees and everything works. I'm not sure. It's more like once you're in a portfolio, it moves up and down on a daily basis depending on how the price goes up and down. But on the bank, it's normally an annual single interest. Philip, Shandy Capital gives compound interest every month, ask me. Philip, they might be giving you interest monthly, but it's not compound, I do not think. So what happens normally with the bank savings account is they tell you, we're going to give you 9%, so it's going to be 9,000 for the year, and you get a choice whether you want to put it on the investment and let it lie on the investment, or whether you want to withdraw it on a monthly basis. So I think that's what we're talking about here. Oh, hang on a second. Folks, we're almost at the end. There we go. Let's see if it works. Yeah. Pleasure. Key, your life is very informative. I wish it was recorded and posted so you can go back to these advices. Okay, that's why you have to contact me. I'm not technologically advanced to go and record it. Fayad, so aggressive funds can result in losses. Yes, it can result in losses. But normally the losses is only because the investor is, what's the word? Not patient. Now I can't remember what it is when you're not patient. It's normally because the investor is not patient, because the investor had these funds. He saw there was 100,000 Rand in my investment, for argument's sake, and then there's a dip in the market, and now there's just 90,000, and now they're like, I want my money because I'm losing my money. Just leave your money there, sir, madam. It will recover. And if they did, month, 2, 3, 5 months from now, it will be back to 100,000 Rand, and it will keep on increasing. So it's investors normally lose money on high-risk portfolios because of their impatience, because of them being scared of what they see. But if you have the patience and you have the you have to believe, you work with somebody that understands this stuff and can guide you through it, if you can wait a bit of time, you're not going to have a problem. Oh my goodness, Doe, you come with this question this time of the evening, but I need to go and have some supper. So Doe says, can I talk about approved and unapproved benefits or life cover? So approved and unapproved life cover, if you've got a group cover, a group life cover at work, your company gives you group life cover, okay? Then I will tell you that we give you, let's say, 2 times annual salary as your approved life cover. So let's say your annual salary is 500,000 Rand, they give you 2 times that, they give you R1,000,000 Rand. Then in terms of unapproved life cover, that is when they say, okay, you've got R1,000,000 Rand life cover, but we're willing to give you a further 500,000 or R1,000,000 Rand life cover if you want it, and you will pay for it, but then you just have to do medicals. And then they let you do certain medicals. So the unapproved benefit is the extra that you can get if you want it and you're willing to go through the medical process. I hope that short explanation gives it to you. Odex, I've answered your question about risk. Daniel, do you like noodles? Oh, Daniel, I think you're in the wrong group, right? Which investments are available in SA that has daily or monthly compound interest? DAS 7, China. All investment houses have compound growth investments. And it is not daily or monthly compound growth. The growth depends on what happens in the fund. It's so difficult to explain. If you have 10 Rand in your fund and the price of your units today is 10 Rand, and that unit price grows to 11 Rand, then tomorrow you don't have 10 Rand, you have 11 Rand because that's the growth. Now, when that thing grows by another 1 Rand, then you've got 12 Rand. So it's growth on growth on growth on growth on growth. And that's how it works. It's not determined on a daily, weekly, monthly basis. It's determined on what happens in the fund. I'll try and find an easy way to explain this, but yeah, it's technical. What you as an investor should understand is whether I want to be an investment that just gives me single annual interest or whether it's giving me compound growth. And you want to be in a compound growth investment. That is the bottom line. Okay, folks, I'm almost finished. Like I say, it's time for me to go and have some supper. My time is up at 7 o'clock. I'll answer you very quickly here. Carl Stevens sê, Corneille, moenie al my kliënte steel nie. Kyle, I think I've spoken to you from before. I'm not sure. But Kyle, you are a financial advisor and mate, I've got a need for a couple of financial advisors and we've got some very exciting things happening at our offices. Maybe you should give me a call. Let's go and have a coffee. Is it safe to invest in easy equities, King? It's as safe as the actual shares that you buy there. That's how safe it is. Whether it's good, I don't know. Do you know how to deal with shares? Do you know how to do your own investments? No problem. Are you just doing it to play around? Well, enjoy the ride. Don't you know what you're doing and you don't know why you're doing what? Get advice. That's my answer. But if it's safe, it is as safe as the actual share that you buy in easy equities. Desi, my fee for the first consultation is 1,000 Rand and I'll recommend that you cash in now because I'm going to up this fee in the very near future. What can you offer on a 5-year fixed investment? Odex, it all depends. We come back to that risk thing that we were talking about. And I can basically offer you anything from 7% to 14% depending on the amount of risk. And also dependent on if the portfolio keeps on performing the way that it is. But for someone like you that don't like a lot of risk, I would say you can go onto a medium risk fund on a 5-year investment and you can be pretty sure that you're going to get a 9% return on your investment. What's the average return one could expect from a crypto arbitrage? Frank, very difficult to say, but I've seen returns of 45%, as much as 55%. I've actually got statements of clients on which that is the case. The average return also there depends on whether you are willing to go for all the trades or whether you're going to build in a specific profit margin in your trades. But yeah, the average return, I would say anything from 25 to 40%. King, I've just answered you. And let's see. Okay, folks, I think I have successfully done what I wanted to do. Do give your telephone number or how we can contact you. So Legend, first of all, my telephone number is in my profile. That's the first thing. The second thing, I actually gave out the number earlier, but I'll give it again. Here's my WhatsApp number. Oh no, that's not my WhatsApp number. My WhatsApp number, where you can send me a message and then I'll start talking to you, is 060 541 4685. 060-541-4685. That's where you can contact me. Frank says, thanks, Gunnar. You don't have to answer now. Ladies and gents, thank you very much. I hope you enjoyed it. I did, as per usual. And now I'm going to grab some supper. Have a good evening. Bye-bye.